Ashok Mittal, he's CEO Commodities and Currencies MK Comtrade, and he joins us live on the show. Ashok, hi, welcome. Before we talk about the strategies in all of those commodities, what's the kind of impact that you are looking on CTT in the commodities future trade? The first day, too early perhaps to ask, but have you seen any impact coming in?
Hi Manisha, I think it's a little too early to really reply that how the impact will come on the volumes, but our idea is that the cost has gone up, so the people, at least from the retail and hedging clients who have been trading, let us say that volume we expect might fall slightly because the cost of transaction for the people who are doing short-term trading will go up. Hence, they will not be able to really generate that kind of a profit from the transactions which they do. So it's quite possible that we expect that business come down. And secondly, the people who are into hedging side, that also will impact because the cost of hedging goes up drastically because the cost of CTT is quite higher than the transaction cost which they were paying earlier. So I feel that the CTT will definitely impact the cost, the overall volumes on the exchanges.
Ashok, as you said, it is just the first day, but in the first month now, since it started today, the whole of July, what kind of an impact on volumes are you expecting on percentage terms? Is it going to be 10%, 15% or more than that?
My idea is that the volume will get hit at least between say 15 to 20% if you see for the next 1 month or maybe a longer period from that also, because now it's not only on the say metals, it is also on very selective agri commodities as well. So those commodities, let's say for example soya oil or mentha oil, which are high volume commodities, otherwise they will also get impacted. So the cost of transaction as well as the cost of hedging for both the parties who are into say trading or short-term trading, arbitrage, investment and hedging, for both the parties it goes up. So I think the hit will be around 15 to 20%.
Alright, so non-agri commodities and processed agri commodities is something that's going to attract CTT from today onwards, and as Ashok is saying, 15 to 20% of a hit on volumes perhaps can be seen onto that already. Let's talk about commodities and Mr. Mittal, and what's your sense coming in for the precious metal space? We have seen a rebound from the kind of sell-off that we saw. Would you call it just a correction because perhaps these commodities were oversold, or would you see some consolidation coming in now?
Yeah, Manisha, I'm happy to say that we had expected the levels of around 1210 or 1200 approximately in the last few sessions where we have gone right. So my idea is that we can see some kind of pullback happening on gold and silver both, and we expect prices to say take a corrective step on the upside. Say for example, gold we can expect around $1275, $1280. Hence you can buy for the pullback rally at any kind of dips which is close to say $1225, and then wait for those $50, $60 which you can gain out of this. I don't think the overall trend has still changed, so we'll wait for that how few days trading goes on gold and silver. So I think on MCX Indian markets we can buy around 25,300, 400 levels and expect somewhere closer to say 26,000 rupees. So ideally we will suggest that people should actually book profit when they get this kind of profit, because we are expecting this is a pullback rally as of now. Similarly, silver also I think should be bought around say 40,000 rupees, and we can expect around 42,000 rupees level, which is now a technical resistance as well. So buy for the pullback for this relief rally only, but whether the trend has really changed or not, we should wait for some time. Fundamentally, there is not much change that happened why we will expect the prices to go up, except that in case of gold you will see around 1150, 1170 the cost of production will come as a major factor, but otherwise the China really not doing well. US we are not really seeing much of demand coming there. Yeah, SPDR holdings are still quite low. So investment demand and consumer demand both are not really picking up. So there is no trigger for gold silver prices to go up.
Sure. Mr. Mittal, how would you look at the crude prices? Because that seems to be trading right in the middle of that $90 to $100 per barrel mark where it has been trading for the longest time now. In the Indian markets then, how do you look at the prices?
The view remains same, where we expect the broad long-term range to be between $80 to $100, and we are on the higher end. So we will expect that NYMEX crude should not really be breaking say $100 and above on a closing basis. So recommending to sell, and we will expect that we come very close to 90. That means 90, 91, $92 in the next few days. So idea is actually to sell on upticks for crude oil as well. Obviously during the week when we see the inventory level, then we get some opportunity. The other interesting thing which we have been tracking on oil is the difference between NYMEX crude oil and Brent crude oil. Now it is around say $5-6, and we don't expect this will go negative. So our idea is when it is around $3-4, that time you buy the spread between NYMEX and Brent crude oil, which means you buy Brent crude oil and sell NYMEX crude oil, and we will expect that this difference actually goes up later on. So the difference should go around $8-10. So you can make money in the spread itself.
Sure. Mr. Mittal, before we let you go, a strategy on copper as well, where we have seen a 0.5% gain coming in on your screens right there.
I think copper 3-month LME forward we are below $7,000, so we will expect that we remain below 7,000. Chinese data is not really supporting. The only supporting factor is demand from Korea. So we will expect that you don't go above say $7,000 on LME. So sell on upticks, keeping 7,000 or above as a stop loss, and we can expect the prices to continue on the lower side. In India, I think you sell on any kind of rally, and we should expect the prices at close to say 400 rupees or maybe lower than that.
Let's get in strategies from Bharat Kumar for the day.
Even in case of MCX, I think one can go for buying at somewhere around 25,375, 25,380 ranges with stops below 25,000 on the higher side. We are expecting the market to pull back to an extent of around 26,200 odd ranges. And NYMEX crude is a little bit stretched on the higher side. The Dow correlation is indicating that the market is a little bit stretched on the higher side. So to that extent, I think unless the market closes beyond 58-60 ranges, one should go for liquidating long positions, booking profits on the long positions, and then afterwards reinitiating short positions at the higher ranges, maybe to an extent of around 58-30 ranges to 58-15 ranges, which stops beyond 58-60 ranges. We are expecting correction to an extent of around 56-40 ranges. Copper, it's range bound between 411 on the higher side and 403, 404 on the lower side. So as the market comes, as the prices come to an extent of around the 403 ranges, I think one can go for buying with stops below 399 ranges. At the same time, supply is seen at around 410 to 411 ranges. So the market is typically range bound. One should adopt range bound trading strategy.
Let's get in Sushil Sinha from Karvi, and he joins us on the show with his strategies. Sushil, hi, welcome. The gold prices have rebounded quite strongly after that worst quarter in 9 decades. How are you looking at the prices today?
We have seen Friday evening market has taken a pullback, particularly in the bullions, and even at international level also, and that has been mostly led by short covering, and today morning also it is likely to move up by as presently COMEX spot is running up by $10 around. It is around 10.40-43 range, and if rupee depreciates, then there would be a sharp increase in the prices at MCX platform. However, if rupee which is likely to appreciate, then the gain in bullion prices at COMEX at MCX platform would be limited. Taking the cues from international and domestic releases, we assume that euro is likely to be strengthened till afternoon session, and might be in the evening we will see positive data release from US zone, so that will limit the gain in the bullion prices. So till afternoon we can have a buying till evening session. Rather, we will be having a buying in a gold and silver, and after that there might be some correction in the bullion prices. So gold can be bought around 25,700 level for the target of 25,850 to 870, and the stop loss can be around 25,620 to 640 range.
Fair point, Sushil. What's your sense coming in for copper as well? Because while we have seen some strength in this space as well, but $7,000 per ton on the higher side on LME is still a resistance.
Among base metal complex, which has moved in a very narrow range, consolidation has been seen there. In particular in copper, where though inventory is quite high at LME, however the positive releases from Eurozone might give a pullback. However, seeing the Chinese data, we can have a selling view rather at 406 for copper, and target can be around 402, and the stop loss can be around 408.